Hello and welcome back. My name is Financial Coach Ruthie, and my goal is to encourage you to slay debt, gain wealth, and pursue outrageous generosity through intentional living. So today we're going to have a look at stocks and bonds and their fact sheets, and this is going to help us to know what we're looking for when we continue on to look at our Manulife Employer Group Funds. Finally, we got to that place. Yay! Took a lot of learning ahead of time, but now we got to the cool stuff. I'm excited. So understanding a fact sheet is going to help us understand our investments a lot better and know exactly what stocks we're invested in and the names of them and how much. So on the fact sheet, we're going to cover the ticker symbol, the currency, so whether it's the Canadian dollar or the American dollar, the stock exchange, the benchmark and type of benchmark, number of stocks, type of stocks, whether there's a dividend yield or not, sector weighting, and volatility, and the error that might be involved in tracking the index, whether there is an error and what percentage that is. So before we get into that, I want to point out some new information to keep in the back of your mind. So I want you to remember that there are small, medium, and large cap or mid cap and large cap companies that you can invest in. And what does that even mean? So small caps are companies that are smaller, obviously, and tend to be less than $2 billion. They tend to be more risky, but they also have more opportunity for growth. And then there's mid-cap companies. So those are the $2 to $10 billion companies, and they have that nice middle of the road balance between growth and stability. And then next you have those larger companies, so the greater than $10 billion companies that we're all familiar with and we've heard before, like Amazon and Microsoft and Apple. And these companies make up 90% of the total US equity stock market, and they tend to have high dividend yield payouts, and they tend to be less risky and more stable, but there's also that less opportunity for growth as well. So keep that in mind, keep that in the back of your head when we are looking at the fact sheet and looking at the different companies, okay? So we're going to have a look at some ETFs from Vanguard and then compare those to the ones from Manulife. So you can look at the website here for Vanguard, and there's different various products to choose from. So you have index ETFs, you have active ETFs, and you have mutual funds. And we have some asset allocation ETFs as well. So today we're going to have a look at the fund sheet, or the fact sheet, sorry, of an index ETF, and it's called the FTSE All Cap Index ETF. So all cap, what does that mean again? It means small, medium, and large, so all of them together. So before we get into that, I just want you to briefly glance and see that the management fees on there represent 0.05%. And then there's the MERS right beside it at 0.06%. So the MERS are the total of all the fees that you should be paying for that. And if you move over, you can see the total returns at 1 year, 3 year, 5 years, and then since inception or since that fund was created. So now past performance is not always an indicator of future performance. Keep that in mind. So it isn't always going to be your top priority when picking a stock or a bond. Compared to the fees, in my opinion, because you're always going to get charged the fees regardless of how well or how poorly the stock or the bond performs, or the ETF. And it's still something good to keep in your mind, but you probably don't want to have that as your top priority. But you want to have it in your mind so that, say you make 4% as a return, but you're paying notice that inflation is 2%, so you're only gaining 2%, but at least you're gaining more than you're losing. You probably want to get a little more than a 2% gain, but at least you know whether you're keeping up or going beyond inflation, which is good to know. So also remember that time in the market is more important than timing the market. So the longer you can buy and hold a stock, an ETF, an index, a bond, whatever, the better. And the younger that you are and the sooner that you start investing, that will work out better for you as an investor. So enough jibber jabber, let's get into the fun stuff. So what is the goal of this company that we're looking at? The goal is to track the performance of a broad Canadian equity index for large, mid, and small Canadian companies. So the ticker symbol is VCN. It's on the Toronto Stock Exchange. It's in the Canadian currency, not the American one. So we can see what index it's in or benchmark that it's tracking or seeking to follow, this FTSE one. You can see how much money is involved in this fund and then the year that it was started, so 2013. You can look at which laundry baskets or investment vehicles you're allowed to invest in with this company, or this fund, I should say, sorry, whether that's an RRSP, a TFSA, or an RESP, whether that's registered or unregistered investment laundry baskets or vehicles, whatever analogy you want to use. So we can again look at the management fees. It reminds us again, the same as that initial website that we looked at. And we can look at the management fees and the MERS. So after your fees have been paid, this is the interest rate of return for each of these years. So you can have a look at the different gains or losses over the various years. Some are pretty great and some are pretty dismal. That's kind of how the stock market goes, up and down. That's why you want that time in the market, right? The longer you go in there, the more it's going to go up over time. But the day to day, the month to month, and the year to year is going to vary. Next, you can look at how closely the returns in this fund have mirrored the benchmark or the bench index's returns over the past 3 months, 1 year, 3 years, 5 years, and since inception or when it began again. So we see that the number we saw on the original site, of the website when we just glanced at it first, was the same, that same 7.07 on average since inception. Next, we're going to look at the second page. So you can check the date on here when this fact sheet was from. So it's a recent one, November 30th, 2020. You can look at the different ETF characteristics. You can see how many stocks are in this ETF fund. So this fund has 180 stocks. That's the same with the benchmark one as well. So very similar, but it's good to compare the two. So you can scroll down and see that there's a dividend for this stock, and it looks like it's got a 3.1% yield, and the benchmark is the same. So now if we go over to the sector weighting, what percentage does each sector take up inside this fund? So we can see, for example, that financials take up 32% of this fund and 31.3% of the benchmark. So very close. Basic materials, 12.7%, and with the benchmark, 12.6%. So again, very close. And you can look through the rest of the percentage of types of sectors involved in this fund, like utilities, industrials, healthcare, etc. So next, we'll look at the top 10 holdings in this fund. So we see Royal Bank, Shopify, TD Bank. So remember that we saw just now that the sector weighting for financials was 32%. So that explains why there's so many banks that we recognize that are in the top 10 holdings of this company. So that makes sense to us. We can verify that. And we recognize a lot of these other company names in here as well. So next we can look at the volatility of this fund and how closely does it mirror the index that it wants to mirror or track, and the tracking error. So to me, I think a 0.04% tracking error seems pretty good. So I'm going to take a moment here to point out that you cannot just purchase an index, but you have to purchase it within an ETF or within a mutual fund. So unfortunately, just buying the index itself is not an option. So next I want to have a look at a bond ETF so we can kind of get a general idea of what that looks like on a fact sheet. So we're going to look at VAB. So that's the ticker symbol. We can see the stock exchange. So this is all very similar to the equity fact sheet. You can look at the currency again, a Canadian one. You can look at the returns, how it's been doing in the past, and what is the goal of this fund. can look at the benchmark or the index that it's tracking. And what are the fees here? We can look at that. And again, the types of different laundry baskets that you can invest in and the amount of money involved in this fund. So we're going to go through the same things again. The only difference with bonds, of course, is this tells you who owes you money and where that money is from, whether that's from provincial/municipal governments or federal/treasury. You can look at see whether it's from corporate and what percentage of these are in the sector weighting. We can also have a look at the type of bond, so whether this is a quality one or not. So how reliable is this company or government in paying back this fancy IOU? What's the maturity deadline? So when are these IOUs going to mature and need to be paid back? We can also have a look at the volatility error. All right, so that's that fact sheet for a bond fund. Next, we're going to have a look at an all-in-one ETF, just to kind of get a little bit different feel for this one. So we're going to look at VBAL, VBAL. So as we look at it, we notice that the percentage breakdown of the bonds versus equity involved, and we can see that there's not just one bond or one equity involved in here, but there's several different bond and equity indexes. So we can look at the goal here. What is the goal of this fund? It seeks to have 60% equity and 40% bonds. So this is very similar to our Manulife, Alberta Health Services, target date funds that we are invested in through the employer. And this fund will have to be rebalanced when things get out of balance. For example, if the equity returns 70% equity because it's been a really good year for those stocks, then they're going to have to rebalance and sell some of those stocks to buy more bonds, which are now down to 30%, and then increase that back up to the 40%. So they were back balanced to the 60-40, which was our original aim or goal. So I hope that this gives you a little bit of help when you're looking at a fact sheet for a fund, and it helps you decide whether or not you want to purchase this bond or equity or all in one. Now, if we look at our Manulife fund, we have to look at what the breakdown looks like in a moderate fund, because that's what I was previously invested in, and this is what I looked at was what mine was invested in. So looking at this, it looks like there's several different funds involved, and we can see how there's the Global Equity Index by BlackRock, which makes up 29% of our index, makes up 29% of the fund. The Bond Fund by PH&N, that makes up 5% of the fund. Canadian Equity Fund by VBAL, I'm not sure if I'm pronouncing that right, but this makes up 9% of our fund. The Canadian Q Growth Fund by CC&L, that makes up 9%. Lazard Global, that consists of 2.5% of the fund. Templeton Global Equity, making up 29% of the fund. Alliance Bernstein Canadian Core Plus Bond Fund, that's a mouthful, that makes up 5%. And the Canadian Equity Fund by Fraser, that makes up the last 9% of this fund of funds or target date fund. Notice that most of my fund here, 29% is in an index fund. So are they really picking stocks or not? So there were some changes that were made to this fund in October 2020, and I just want to show you some of those changes. So you can see that Mauer Global Equity replaced 50% of the Templeton Fund, and Manulife Global Equity Fund replaced the other 50% of the 29% of that fund. So how much are we paying in fees? This is the bottom line, right? So in the next slide, you're going to see how each fund has its own fees and what does this add up to for you as an investor. So that depends on which fund or target date fund you're invested in. So whether you're conservative, moderate, or aggressive. So it took me a long time to find these fees and these numbers and how much it was gonna cost me to be involved in this fund of fun. Now keep in mind that Alberta Health Services also matches you up to 2%, so you're getting a lot of free money. So that's why I'm still in it. So I wasn't very impressed with the Manulife website. It's not easy to navigate, it's not easy to look at, but once you get on there and you get going, it's easy to make changes on there. So I changed all of my funds from a moderate portfolio to changing mine individually to 3 index funds, and that's it. So I can show you how to do that in another video if you're interested in doing that. Now go and be intentional and have a look at a fact sheet.